Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 6th of July. So the US is back to business today after the holiday on Friday for Independence Day. We've also seen increases in the coronavirus cases around the globe, and now many countries are now, or certainly a number of countries are now entering into the second phase of new lockdowns. This is happening in Australia, it's happening in the UK, and now also the second region within Spain has also gone into lockdown too. And it's not to even mention the increases and of the pandemic in certain states in the US like Florida and Texas as well. So this is just coming into the earnings season as well. So how that's going to start to impact on the markets should be sort of closely watched by many traders. So let's take a look at a few markets here that we're keeping an eye on in the trading room and some of the opportunities that we're looking at. If we come to, first of all, the Forex market that we're liking this morning, we'll take a look at Euro against the Great British Pound. The Euro, or Great British Pound, I should say, has been particularly weak for some time. This has been on the back of the impact that the pandemic has had on the British economy, but also on the Brexit negotiations as well with Europe. You can see here that through this time, the market here on Euro GDP has been sort of picking up some momentum here on the weekly chart. We've had a sort of reasonable trend started to form here, again with reasonable momentum behind that strength of that move as well. Now the market's just in the process of sort of breaking through this level. I've got a bit of a level in here. It's a bit of a rough level on this time frame. You can kind of sort of mark it in, around this sort of zone where we've had previous sort of highs tested here. The market's just sort of getting through that sort of price point at the moment. If we bring this down to the daily time frame, we can see that the daily time frame is now sort of looking quite reasonable. The market here for the past sort of two trading sessions, you can see have been very small inside candles here, these sort of doji style candles forming, just indicating that there's been some clear support underneath the market there. You can see if I mark a level in just underneath there, and we'll see this easier on the slightly lower time frame, but there's been some key support through here, and now it's looking like the path of least resistance is for a run towards the long side. If we take a look at this on the 4-hour time frame, you can see the level that I'm talking about a little bit more clearly. Now this morning we've just got a bit of a breakout here towards the long side, and we're starting to look for strength coming into this market and a bit of a continuation move here. You can certainly see that there was some decent sort of size to the decent distance to the long side here. We've probably got not only the level that we saw there on the weekly chart, which was up to 93, which is off the chart here, off the that we can see, but even for runs up to sort of first areas up towards these highs up here, still leaves plenty of distance to sort of get positioned and get covered before the market starts to sort of tackle with those levels. So we're liking Euro GDP to the long side, and we're looking at swing plays to sort of positioning as best we can to get risk-free before for taking advantage of this market long. So if we come and take a look at the Dow now and take a look at where this market is, if we have a look on the daily time frame first of all, we can see that the market is now just above that 26,000 level. So it's again quite a key price point here on this market. From a swing perspective, we've got levels up here around 26,600 and then towards that 27,000 to the long side. Certainly at the moment, after the market sort of tested the downside to sort of 24,700, we've seen continued strength in this market going forward. So again, the path of least resistance certainly looks towards the long side at the moment. Having said that, these markets do remain highly volatile on intraday news statements and releases, so be wary of intraday volatility, and you can see this here on the 4-hour time frame sort of playing out, where we've had very sharp retracements, highly volatile sort of price action, but the general direction still continuing to the long side. Now, I've been having a look at this level this morning. We've got this 26,000 sort of price point, which I'm happy with as being a structure level. We've also got another level in here around 26 sort of 300, where you can see that we've had these previous highs before. But I'm thinking also actually sort of just pulling that down slightly to where the market sort of reacted more so more recently. Here we've also got a bit of congestion through here too, and it's also back through here on the run up where the market found resistance too. So that's around 26 sort of 170 area, and you can see the market's just sort of retested that level and it's softening off there this morning. So whilst I still continue to like this market long, certainly whilst we've got so much momentum in this market, I would be a little bit cautious about new long positions before the 26 170. I'd like to get the market above this area. We've got a decent sized trading window above that for possible run up towards that 26 600, but we do need to be careful of that 26 300 price point just here, where we've probably got more intraday sort of resistance around this sort of price point. Now, if we come and take a look at gold here, and we can see that gold has had a very good run lately. It's from a higher time frame perspective, it's looking extremely strong. If we have a look at this on the weekly, again, you can see that the market's up against this or very close to this 1800 level, and still looks sort of fairly strong. There's a few warning signs here really with gold. From a macroeconomic perspective, we would expect, and a fundamental perspective, we'd expect extremely higher gold prices. Now, that doesn't mean to say this is a one-way move, and it's certainly not easy market to trade. You can see since the coronavirus sort of pandemic has come in, there's been some real extreme volatility in this market, as you can see. At the moment, we've got sort of weakening indicators here as the market's sort of pressing up against that level. And that's on a swing basis. So again, if we just sort of come down to slightly lower time frames, the daily time frame, we don't see that sort of weakness in momentum on these recent moves, and the trend here is starting to look sort of quite reasonable. Looking at price action here, I think a fairly reasonable expectation might be that we get at least another test here of the 1800 level. Once we get to 1800, then it becomes a little bit more challenging, because you can see that the market's been testing there 3 times. This will be the 4th. I'd certainly be keen to keep a piece of this open if I got positioned and risk-free by 1800. Otherwise, I'd prefer to sort of book profits and then relook at new opportunities. If we take a look at the 4-hour time frame, you can see that the market sort of pulled back into 1780. It's found support here. This has been quite a strong level for this market over recent trading here. You can see this, if I just zoom out, 1780, quite a good support and resistance structure there. So again, at the moment, getting above this sort of area around sort of 1790 up here, getting out of this range, gives us that sort of range right the way up there towards that 1800 again, and that's the sort of window that I think is a reasonable opportunity to look for. So this is an area what we're looking for that move, and obviously opportunities on this market will be on those lower time frames. So there's a few markets there that we're keeping a close eye on in the trading room going forward into this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.